Bitcoin is the first thing that comes to mind when it comes to digital currency, as it has grown at the speed of a fighter jet since its debut in 2009. Bitcoin is a decentralized digital currency without a central bank or a single administrator that can be sent from user to user on the peer-to-peer Bitcoin network without the need for intermediaries. But before we advance any further, I really want to welcome all of you to the Money Masters. Please go ahead and subscribe to the channel and like the video. First things first, before getting started with the predictions, let me tell you how we calculate or predict the cryptocurrency price. Part 1. How to calculate the price of cryptocurrency. Just as everything has a scale by which it is measured, so does Bitcoin, called market capitalization, or market cap, which is an indicator that is used to measure cryptocurrency value. Bitcoin is the most powerful cryptocurrency around the world with a $1.22 trillion market cap and a price value of $64,624.43, while Ethereum is the second largest cryptocurrency with $552.42 billion market cap and $4,676.97 of price value. Remember, values can vary at the time of this video because the cryptocurrency market is very versatile. However, gold is still the biggest asset in the world with $11.863 trillion of market cap. Like every other asset value, the price of Bitcoin also depends on some factors that are analyzed and predicted by the experts. The price of cryptocurrency is calculated by dividing its market cap by its circulating supply. 2021 remains an amazing year for Bitcoin. Many experts are predicting that the future of Bitcoin is very bright in cryptocurrency. Anthony Pompliano, who is the founder of Morgan Creek Digital, said that the price of Bitcoin can hit $250,000 in 2022. Okay, now the main part. Let me tell you a few factors that show why Bitcoin prices can be very high or low in the future. New regulation. Previously, it was very difficult for investors and tax regulatory authorities to keep an eye on any capital gains or losses on their crypto assets. However, legislation around the world is trying its best to make rules and regulations for cryptocurrency to reduce cybercrimes. Because of the volatile market structure and no regulations on cryptocurrency, investors suggest keeping only 5% in cryptocurrency of your total portfolio because they think that losing 5% is better than losing everything. This means currently, investors are putting a very low investment in cryptocurrency. With the recent debut of ETF Bitcoin in the New York Stock Exchange, they developed a new way to invest in cryptocurrency for investors. When more investors will start putting investment in Bitcoins, the prices of Bitcoin will increase. What is an ETF? An exchange-traded fund is a type of security that tracks an index, sector, commodity, or other assets, which can be purchased or sold on a stock exchange the same way a regular stock can. An ETF can be structured to track anything from the price of an individual commodity to a large and diverse collection of securities. ETF allows investors to invest in something without having to purchase it. Mainstream companies. Big companies are getting ready to be with cryptocurrency. PayPal and Square are also trying to find ways to provide services to their customers for purchasing Bitcoins. Tesla is still back and forth in making decisions about the acceptance of Bitcoins, although the company still holds billions in crypto assets. Experts think that big companies are getting ready to jump into cryptocurrency. Amazon has recently been rumored to be posting jobs related to digital currency and blockchain. Walmart is also trying to appoint digital currency experts to move with the digital world. Big institutions are getting involved in crypto, whether it's Amazon or the big banks. That can be a boom in Bitcoin prices. Just imagine, if Amazon or Walmart start accepting payments with cryptocurrency, it looks crazy, but it's possible. Volatility. Sudden ups and downs can be seen in the cryptocurrency market. Those who are investing in short terms can lose everything with emotional reactions. But if you want long-term growth with cryptocurrency, then you're good to go with Bitcoin. You should invest and simply forget about it. That is the best thing that you can do for the long-term growth because experts continue to tell us there's always a price swing in Bitcoin prices. So don't fall into your emotions and keep waiting for peaks after recessions. More people across the world are trying to get more detailed studies about cryptocurrency and they are investing in Bitcoins in the long term. Again, more long-term investments can lead Bitcoin to a hike. Supply and demand. The supply and demand of assets always play an important role in price predictions. Usually, a scarce asset always has a high demand and high prices. The supply of Bitcoin reduced from 6.9% in 2016 to 4.4% in 2017 and 4% in 2018. Corresponding to its prices, the cryptocurrency supply has been reduced. Competition. Bitcoin is the most widely known cryptocurrency, but there is a lot of competition. In 2017, Bitcoin had an 80% market share. but in 2021, it has come down to 50%. Ethereum, for example, has emerged as the second largest cryptocurrency with more than 18% of the cryptocurrency market. Ripple's XRP and Cardano's ADA have also surged in popularity. Despite this, competitors have attracted a lot of market attention, but it has also benefited Bitcoin even more because, due to competition, awareness about cryptocurrency is increasing, and people across the world are investing more money into Bitcoin because of its huge market share. Despite cryptocurrency market values, we actually cannot predict what exactly the price of Bitcoin will be because of not a consistent history about prices in the past. Many experts think that Bitcoin is going to break new records in history, while others think that cryptocurrency can lose its value. For example, Chamath Palihapitiya, founder and CEO of Social Capital, says to the Halftime Report, "It's probably going to 100,000, then 150,000, then 200,000. In what period? Don't know. Maybe 5 or 10 years, but it's going there." On the other side, James Ledbetter, editor of FinTech, told that if you look historically at the price of Bitcoin, there have been a number of occasions where it's really spiked and then comes crashing down really quickly. Let me show you a few more opinions. Robert Lawn says, "Think of the implications of a currency that has no border bars, no form entry, and is not controlled by a government. At a time when we're seeing just how much power is abused, I think the world is ready for a currency that is decentralized and controlled by the people. But yes, Bitcoin still has a journey ahead of it. It needs greater adoption and more simplicity to appeal to the general public. But then again, the general public should be more informed anyway. Monetary decisions affect them more than the people that make the decisions." George Burke, "Most finance pros are divided on Bitcoin's usefulness, value, legality, and whether it's a currency or commodity or something else. But one thing we can all agree on is while it's much safer and cheaper for a merchant to receive payment in Bitcoin over the credit card, only very few merchants in the world accept it, which is keeping the awareness, price, and usefulness of Bitcoin low. So, until accepting, Bitcoin becomes ubiquitous, where purchasers and vendors won't ever need to exchange it for fiat currency, because they can spend it in most places. Bitcoin users need to continually exchange their coins for US dollars, or look for services to make spending coins as easy as swiping a credit card." Griffin told the New York Times the early generation cryptocurrencies, Bitcoin for example, are incredibly expensive to manage payments on. Bitcoin is a huge contributor to global warming, bigger than any form of payments we use around the world in aggregate. Bitcoin can hit a hike in prices if countries around the world start making legislations to reduce the scams, while large companies start accepting Bitcoin as standard of transactions. Investments in cryptocurrency are always risky because they are very volatile. You should do a lot of research before putting all of your money into it. An expert shared this opinion that, on top of being extremely volatile, most cryptocurrencies are unregulated, which not only adds another layer of uncertainty, but also means that investors have little or no protection against fraud. If you also want to invest in Bitcoin, keep an expert close to you and always keep an eye on the cryptocurrency market. Subscribe to the Money Masters to keep us around. Do you think the price of Bitcoin will increase or decrease? All the factors are in front of you. Please let us know your opinion in the comments. See you with another great video. Until then.